What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're talking about Deere, ticker DE. Now, as promised to the man from Austin in our chat, I will also touch briefly on CRM because ask and you shall receive. Couple of cool things happening. If you haven't already joined us in the chat, make it a point. It comes across the bottom of the screen, this discord.gg, and then the little p, the BWCM, the little s and a G. I keep forgetting to get an actual vanity URL for us. Let me write that down so I don't forget. Chat URL. A nice little redirect so that we can have that automatically. So I'm going to do that. Get that going. But in that chat, we've added some functionality. Hey Bruno, hey Kyle, hey Mr. Williams, Spencer, what's up, dude? I assume you are the SK Austin. Ron, what's up, man? So in case you missed it, added a little functionality to the chat after Freak the Millennial kept poking me. I was like, you know what, whatever, I'm gonna go ahead and throw a couple bots in there. So we've got a couple bots in our chat to help moderate because we had some how do I say it, I had some haters coming in there and spouting nonsense, getting banned immediately on several occasions. So it was a mild annoyance, but we took care of it, so that is a victory. So that's good. Tracy, Danny, how you doing? So anyway, so then within that chat, I was asking people what we want to do today, and this is what we got. Also, I am looking for ideas as to what you guys want to do tomorrow. It's a shortened holiday week. Not as much structure here because we're not going to have anything going on Thursday, obviously, because of Thanksgiving, and then Friday being a half day of trading. There's not going to be much going on there. And Friday morning, in fact, I'm going to be driving back. So bots don't ban names, by the way. This is true. This is true. So we'll still have to keep an eye on things. Yeah, we'll still keep an eye on what's going on in the server over there. And so if you see any nonsense, I apologize if anyone was offended by anything going on in there. It's, when you're in a public forum, I guess we could almost take this as a compliment that, we've gotten large enough to where there are random trolls that have noticed us, so they are coming in on things. If you hear the music bumping today, Jeff, you'll appreciate this. I got a Razor Leviathan on sale here. I'm thinking there's going to be a bunch of new sound bars and surround sound units that come out this year. Either way, I got a good deal on it. I had the Klipsch Pro Media 2.1 up in Chicago. I wanted to get 5.1 sound, so went with the Razor Leviathan. So this is not a paid product placement, by the way, but so far so good. I'm pleasantly surprised with it. So that's the new soundtrack being bumped by that. Okay, why don't we go ahead and get into this because we want to cover a couple of things. And again, if you're not already hooked up on the distribution list, you just go ahead and shoot me those emails, livetrader@zax.com. We will get you on the list and go from there. Okay. Yeah, the market closes early on Friday, Kyle. You get these early days every once in a while. Shortened trading sessions. Very rare, though, but they do it the day after Thanksgiving. Okay. So, let's take a look, kick things off, as always, on the price consensus and EPS surprise chart here on Deere. It was very interesting for me to see this. Okay, so the black line corresponds to the right y-axis, which is price. The green arrows are earnings beats, so they're going to beat. The multicolored lines represent the evolution of our Zach's consensus estimates over time. And what you're going to see is this sort of fluttering downward. And then things started to change for the stock, and then the estimates here in 2016. From there, there's this nice little trough. When you're looking at stocks for either turnaround stories or value plays, this is something that you want to look for. Looking for bottoms is tough, and using technical analysis alone to find bottoms doesn't always work, because you'll get short-term bounces on the technical perspective. Doesn't necessarily mean you're good from a long-term perspective. Bodon, how you doing? Dr. Paul, you did make it. So what I like to look for, which gives me a much higher probability of success, is a turnaround in the earnings estimates, okay? Now, like most of these things, hindsight's 20/20, right? Because you could look here into 2015 and you see this move up here, right? So things started to tick up. But if you notice that the next year numbers were still down, so you never want to see that. You want to see a trough happen, and everything start to turn around and move, right? So this trough started to happen in mid to late 2016, basically probably about a year ago. Got the turnaround. We made some money on Deere in the past also, on these estimates creeping up. Now, this big jump up is fantastic. Corresponds there to big move in estimates, big move up in the stock price. So this is all very good. You get the last quarter here, some volatility, and we're going to see that on the chart because this doesn't do it justice. Okay, sometimes these arrows don't quite line up. But here we can see year over year. Fantastico. Okay. Jeff getting all excited about that Tesla Roadster. It's an exciting car. So I just wanted to point this out, that this sort of gap down. So it was selling off into that earnings report. First day was terrible. Got down to the 200-day and then started to rally back up. We're going to come back to this, but I just wanted to give some more clarification on that price consensus and EPS surprise chart. Wanted to zoom in a little bit for you. And we're going to go back. So that's what this is, okay? It's because when you first glance at this, it makes it look real nice. Like, oh, stock was coming down, then earnings came out and it was nice. Nah. There was a lot more to that madness. And that was the result. This is an angry John Deere guy. That's a hat. Maybe it should be green. But that's okay. Funny stuff. Alright. So overall, what do I think about this? Well, I think the estimates have been sideways for a while now. And the last time, well, I guess we get a little bit of an uptick here, right? Okay. Overall, nice sort of bullish move here. And I think I saw a lot of the pundits, there was some CNBC action getting all bullish on Deere too. That always makes me nervous. Let's take a look at the detailed estimates page. They are a Zacks rank number 2 buy right now, so that's good. In the top 9% of our Zacks industry rank, also good. They're going to report before the bell mañana, so I know this is a little bit late. That's okay. And again, I'm going to give a quick little disclaimer here. We are going to give you a couple of ideas for options trades, right? Don't trade options with money you can't afford to lose, okay? Because if I give a bull trade and a bear trade, one of those is going to lose, okay? Just going to clarify that. And it might be the one that I picked, all right? going to further expound on this. So you can use this analysis to determine whether or not you want to be a long-term shareholder in Deere. You don't have to use the stock. You don't have to look at the options trades that we're doing, okay? Doesn't make us evil for giving you options trading ideas. All right, so before the bell tomorrow, let's look at a couple of things. First, on the revenue side. So look at this quarter, 22.32% year-over-year revenue growth. If you look at the next quarter, 10.19% revenue growth. Current year says, nah, but next year it's supposed to be 6.91, okay? So pretty solid revenue growth overall. Now on the EPS side, this quarter looks like 60.11% EPS growth. Next quarter, 48.91. Current year money looks like 34.91, and next year to slow to 7.41. Okay, so a little bit of slowing next year. How's the Trump agenda working out for Deere? Well, I'd say it's pretty good. Overall, it fits in well with MAGA and any domestic policy meant to spur the economy and is going to be good. Buy American and so on and so forth, all the above. Now take a look at this. That's right, Paul. No money back guarantee. You know. I got to go on a little bit of a side here, okay? Because you guys know me, I'm good for these asides. So, a lot of you, and I thank you very much. I've gotten, emails from you guys, thanking me for the show and putting in work and what you've learned and all that. And I love that stuff. I absolutely love it. And then every once in a while, I get some flack, right? I get somebody got upset and wants to, throw me under a bus and talk some garbage. I used to get real upset about stuff like that. It used to really bother me. But honestly, I want to thank you guys because of all the, all the positivity and all the love you guys have given me. Now it doesn't even bother me anymore. And because I can honestly say that for every one negative email, I probably have 10 coming back. So in the positive direction. So thanks, guys. I'm growing as a person because of you guys. So thank you. See, I get something back from this. Of course I do. All right. Now back to this. Let's look at the analyst revision. So over the course of just the last week, you've got 2 analysts that have increased their estimates for the current quarter, 2 for next quarter, 2 for next year, or 2 for the current year rather, and 1 for next year. While nobody's had the chutzpah to come out and say anything bad about this name. That's pretty good, okay? Because earnings is tomorrow. So for an analyst to come out ahead of earnings just a couple days away or a day away or 7 days away, whatever it is, increase their earnings estimate, that takes something, okay? That takes some real conviction. So that's a good sign for earnings this quarter. If you look at the magnitude overall consensus, we've gone from $1.37 to $1.44 for the current quarter. Next quarter has gone from 90 down to 87, back up to 91. Current year number from 644 up to 649. Next year from 690 to 697. So all this is still very positive, moving in a good direction to the upside. Okay. And then if you look at the surprises, there have been some small surprises, nothing spectacular. Save for this. I guess you call this spectacular too. But the 4% surprise last quarter wasn't much. 11%, 11 cents, not 4%, but 4 cents, 11 cents. The 79-cent was actually a little bit of a surprise, and then 54 so this is a year ago, right? So we're still looking for a big gain over that surprise to the upside number, so that's all very good. All right, now let's dig in a little bit here. Now what I'm seeing here, this is on the revenue side, and I think I'm going to go out. Let's just do the 10-year number. I've got Deere against the rest of their sub-industry. The annual numbers. So there's been some contraction in their numbers sort of year over year here. But I think it's a timing. This is a timing issue. Well, this is a broken software issue, actually. Look, guys, look at this. You see this? Look at this. 55-25, 56-25, 78-75, 82-87, 67-24, 78-08, 65-20, 69-11. All these numbers are up. How is this number down? All right. Sorry, guys. I can't tell, you know, sometimes I get these stream errors here, and I can't tell if you guys are seeing them real time or what's happening, if it goes down or whatever. So I don't know. So I apologize if I go blank and for a little bit and try to figure out what's going on here. Okay. So anyway, so I don't know what's up with that. Why those numbers are wrong. Having some streaming issues lately here. Look at you in the Twitch. Yeah, I don't know. It's always something. Yo, there's a glitch in my matrix today because nothing has been going properly for me. Every single thing I've done today, a little bit of gremlins in it. Is Mercury in retrograde again? It probably is. It's gotta be. Something goofy is happening here to me today. All right, now let's look at the EPS side of things. Lots of little gremlins in the matrix here today. All right, so the actual EPS side of things. Look at this. Boom. 34.9% growth here. And look at the numbers. So there's a couple of things that I want to show. So we've had growth a couple of quarters in a row. This quarter you're still looking for big growth, okay? So you're looking for this 144 versus the 90. And remember, the 90 came out a surprise, right? And the real question is that next quarter. So this next quarter, you're still supposed to have real nice growth over the year ago period. This is when the problem is going to be, is when you get a contraction in EPS like that Q2 of 2018. So what I think is that we're going, without even doing anything, I think next quarter's report, when we're looking at this thing, we're going to want to be bearish. So somebody remember, next quarter we should be bearish, okay? But that's not here yet, okay? Really digging into this EPS has helped us, I think, over the last several videos that we've done. We've had some good luck, except for stupid Foot Locker. Stupid Foot Locker. I knew I never liked Foot Locker. I used to work at Finish Line when I was in high school. This is the greatest job ever. Except for working at Zach's, because this is pretty darn good too. No free shoes though. But I can't afford the shoes now, so that's a good thing. And then now I don't even want them. Funny how life works. Let's look at some valuations. First, the PE. This is forward PE, okay? Not out of line with sub-industry. I'm not so concerned. But let's look at the rest of the market. Pretty much in line with the rest of the market also, okay? Could have a buffering problem in my OBS. Correct, Jeff. Not going to solve that right now. Bit rate could be too high. Perhaps. We'll have to fix that next time. All right. Now, what else do we have here, boys? Valuations is what it is. Now let's look at the revenue side in valuations. Price to sales. As always, one of my faves. Very low price of sales overall for Deere. But historically, they trade pretty low. But the last time that this price to sales was up here was 2010, 2011. 2011 is the last time that Deere traded this rich compared to price to sales. Look at this, though. Isn't this amazing? You see this? When there was a premium, you know, the price to sales premium for the S&P 500 over John Deere was very small. So this is about, what, 1.9? This was over 1.5. And then now Deere's gone kind of sideways while there's been this inflation in price to sales in the S&P 500. Now there's a number of different reasons why that could be taking place, of course. But this is what we're getting. This is what we're getting right now. Okay, so overall, what's my point here? I don't think the valuations are stretched so out of whack, not only on the revenue side, but also especially on this EPS. If you're looking at forward EPS for the next year, okay, it's actually come down. It got a little bit out of whack, came down, and it's in line with the market now here, okay? Not lucky enough to be trading at a discount to the market, but also not unlucky enough to be trading at a premium. So you do have that. All right. Now, one more thing to look at before we go. That's this consolidated surprise. So this is going to tell us 2 days before earnings to 2 days after earnings what has been the story with Deere. And we see this last quarter -6 move, 8% move, 1%, 11, 14, -5. So it actually has quite a bit of volatility. Has a tendency to move here, my friends. It moves around a lot. So now let's look at the good old bar chart. See what our options chain has to say here. Pull it up. All right. So they're going to be reporting after or before the bell tomorrow. So let's look at this front week. Change from the stack view to the side by side so we can get an idea of sort of the at the money volatility that we're looking at. 138.78. We'll call it 139. Dr. Paul, I knew that you'd be ready to dance to the music, my friend. I knew you'd be ready to rock and roll. Trevor, I apologize for the buffering. You know, we're going to go in and like I said, man, it's just my day for everything to be kind of screwy today. It's just my day. All right, so look at the wide spread here. I don't know about this. Look at that. You see that? That doesn't even make sense. I'm gonna reload this. I'm not trusting bar chart here. 138s, maybe they are that wide. This is what we're gonna do to avoid this. So this, because this is super wide, right? But we see that the last trade was at 337. It's my little cheat. Last trade here was 307. We're just gonna do this. You guys can get more accurate numbers by looking at the bid and the ask at the real time, but I'm just going to do this for... You don't show a wide spread. See, yeah, I'm having... Yo, seriously, what is happening to me today? Like, I'm getting all sorts of goofiness happening. Just there are bugs in the matrix everywhere, man. It is a weird, strange day. Based on the last trades that I'm getting in here, which probably isn't the most accurate, but I don't know what the heck's going on. This is my lucky day. Let's say 638 is kind of what we're looking for. Or 4.5% is what the market is pricing in. Now there's birds making all sorts of noise outside. We're going to go to the December monthlies. December monthlies? Yeah, December monthlies. Okay, we're going to come back to that front week. because I know you guys like it. But look, granted, there's not going to be any lotto in that front week here because you've got a stock that's at $138. So you're not going to find anything super cheap here. Just not going to find it. All right, let's look. December 15th, 138.87. Okay, let's go. Haha, nice. I like it, AA Ron. All my extracurricular activities. It doesn't even happen here. I mean, it doesn't. It's not even. I know what you're saying, but it's just there's a glitch in the matrix, man. I don't know what's. I'm telling you, all sorts of stuff is just not working for me today. And it's upsetting. So, like I talked about, the last earnings report came down, got awful close to the 200-day moving average down here in Thug Pink. Then it rallied up, goes above the 50-day, comes back to the 50-day, and moves. Got a little floor here, a little short-term low that got put in by the 130s. I'd expect that to provide some support to the downside. So this swing low here, 130.77. And then we have this high at 132.50. All right, Kyle, I'm glad you're giving me these numbers because I'll be able to go back and reassess the damage here. Just struggling today. I'm fascinated by this right here. Okay, this is what's getting my attention here. So we have, you know, the spikes in volume, a little trough and a spike. So this kind of spike goes in line with this August high ahead of the last earnings report, and then you get the stock fighting through that level, stalling out a bit, coming back in to retest, and that's where the buying happened. You guys see that? So I think this is a short-term sort of support level. So let's call it the 130s. So let's keep the 130s in mind. And now here's the problem. When you're talking about topside resistance on a stock like this, you don't have anything because it's never been there. So you can play fib extensions if you like. I try not to get too cute with trying to figure out overhead targets. But the support levels are pretty clear. Sort of this 130 level. Then you got the 50-day all the way down at 129. It's basically 130-ish. And then if it gets bad, you know, we've seen it go. 127 down to 117 in one day. It could get down to 120 on a bad report, no question. And that's where the 200-day moving average sits. But the 50-day, 129s. Okay. Now, if you notice, gents, Kyle, thank you for your contribution there. Yeah, I've got a much tighter spread here on December. I don't know, for whatever reason, I didn't have really good data on that front week, but that's okay. So a couple of things I want to look at. Initially, I want to look at, since I saw that 130 level, I want to see if there's any opportunity to sell put spreads out of the money down here. And it doesn't look like much of an opportunity. Maybe you get 20 cents down here. It's not that attractive. It's because it's an awful ways away, right? It's all the way down at 130. That's far off. The market's only pricing in what, $6, so that puts it at 133. Because we're basically 139 right now, right? Yeah, we're at 139. So 133. This is around where the market's pricing in between these two price levels. And selling out of the money put spreads, it's just not getting much love here. You're going to get, what, a 17-cent net credit? Now, we have done that before. It's not my favorite. Not if you're going out to December. No, not if you're going out to December. So are there any debit spreads that look attractive? Using the 139 as an anchor. That $6 takes it to 145. And then here you got the opportunity for Mr. Habsy at the 142. So first we're going to look at a 139, a 142 call spread. Going vertical. 139 call costs you 445. Simultaneously selling the 142 call, you're going to get back 290. Net outlay here is 155. Difference in the strike prices is $3 minus the 155. You can't even double up on this thing. Can't even double up. Woof. What if you did the 139, 145? Still going to cost you 445 for that 139 call. Instead of getting back 290, you're going to get back 190 for the 145. So here you have 255 at risk. Difference in the strike prices is $6 minus that 255. It's 345 on 255. You can make 135%. But you would need John Deere to move every bit of that 4.5%. That's $6.40 to the upside. That's what you would need to see. Bulls. I'm going to write it here anyway. Don't know that that's going to be the trade that pays, but a bull debit idea along the December 15th. 139, 145 call spread for a 255 net debit. Dr. Paul brings up a point here. Remember my little pinching in strategy? So what times is if I'm sitting on this, and particularly within this, right? This range of 139, 145, I'll pinch in a little bit here, pinch in a little bit here. So I'm upping where my long strike is, and I'm dropping where my short strike is going to be. And sometimes you can come up with some favorable numbers that way with a similar risk profile to the one that you're looking at. Now here's the problem though. Does any, sitting up here and telling somebody to spend money on out of the money call spreads, right? Or out of the money spreads in general on the debit side adds an element of risk. So the 140 call here is $395 is where you can buy that. Selling the 144 is going to get you back $218. So that's $177. Difference in strike prices is $4. Minus that $177 is $223 on 177 or 125%. So pinching yourself in, you can change those risk parameters. And again, Dr. Paul, we're going to keep talking here. You can move this, pinch this in even further. Not quite a double. It's going to cost you 105, right? So there's ways to get cute with it and scooch them one way or the other. Now the question is, do I want to be long a call spread into earnings on these guys? I think perhaps what's going to be a decent strategy is going to be selling, not going all the way out to $6 out and trying to find a little spread that you can sell. Okay? Because let's be honest, I doubt that a 170 by 210 spread's going to get you filled at 190. I don't know, perhaps. Then this call side, these short call spreads look a lot more attractive than those short put spreads. If this were the case, I'm a little skeptical because of how wide the spread is. But let's just say on the bearish end, you sold a 190, or you sold a 145 for 190, and you bought a 146 for 159. That's a 31-cent net credit. The most that you can lose on this is 69 cents So you can make 44% on this trade, and all you need is shares of Deere to close at or below 145 at expiration. That's a Bear debit. Bear credit spread, rather. Bear credit would be short the December 15th. 145, 146 call spread for 31 cent net credit. I don't know if you're going to get filled at 31 cents on that. I don't know. If you could, might be worth an idea. Now, you did see a little whipsaw action out of John Deere last time. Which could lend itself for just doing an at-the-money strangle or putting on an iron condor or something of that nature. So I'm going to do a side-by-side on the monthly so we can see this a little better. This can't be, again, I can't have this data. I think I'm having data issues on the put side. Look at this, is nearly, this is in the 4s. I guess it could be. I don't know. So you could. So you could put a put spread, a short put spread, and a short call spread on. I'm just not liking this. These at the money, I'm not even gonna show it. It's just not there for. I'm not feeling it, guys. Not feeling it. Not feeling it at all. Let's get back into this front week. I don't like how wide this at the money call is. What? I don't know what's going on here. On the put side, what do you guys think? What do you guys think? Now, overall, John Deere, this is what I'm going to sum up. You have somebody coming out recently increasing their earnings estimate for John Deere. You have a small little uptick in this earnings, but it hasn't really run up, right? So does that mean that we're going to get this huge run up now in these earnings estimates as a result of what happens this quarter? That would certainly provide some fuel for the fire. That would create a really big bullish event to the upside. Okay? Haha. Dr. Paul has an idea. Dr. Paul says, why don't we just table a John Deere and start talking about CRM? I'm not going to leave you hanging. I got to give you a trade that pays because that's what I do. So I'm going to say that the trade that pays between the two of these, if I have to, is going to be the bull debit. Okay? But no, I'm just going to say that. I'm going to say the trade that pays is a bull debit for Deere. That's what I'm going to say. I'm just going to do that. Because I think they beat. I think they get some drift. What's making me gun shy? What have we... Okay, so who's really dropped the ball this earnings season and been terrible? Signet just had a terrible morning because they have bugs selling their credit portfolio or something stupid like that. Some kind of nonsense. It's just infuriating. And then we've got John Deere, who's up here at highs, but you've got analysts increasing their earnings estimates, and we're on the verge of tax reform here in the U.S., which should all be very bullish for companies domestically inclined. So I think you have to lean and be bullish over here on John Deere. Anyway, one other quick thing I want to point out here, gents, ladies and gentlemen. Couple of big areas of open interest on the call side of things. And then when you flip that over to the put side, not as much. So not as much speculation nor protection to the downside for John Deere. In the recent earnings estimate revision to the upside, I think I'm making a bull case on Deere. Okay, as promised, guys, switch gears. We're going to touch on CRM real quickly. I'm not going to spend another 40 minutes on it, though. Okay, we're going to do a quick one. So CRM, where's my price consensus? Really? You gotta be kidding me. There you go. Now you guys got my password. Dot. So these guys after the bell today, I get a price and EPS. I want a price EPS surprise. Oh my goodness. What about, like, what is going on here? Charts. Price consensus EPS surprise chart. Give it to me. Got the bonus show going, the Deere and the CRM. There we go. Look at this. That's what you want to see. What's surprising to me, though, despite having this growth, look at the Chop City. Just erratic behavior till recently. Right now, it's really starting to catch a bid. And these guys don't miss. They don't miss. No missing. No missing here. And you have this nice little even increase. Look at this big jump they're expecting. Big jump. Where does that translate through on this side? Are you serious? I'm going to have to log in. Oh my goodness. How did this get logged out? You know how? I got gremlins in the Matrix today, man. I'm telling you. Gremlins in the Matrix. Really? And then you... Oh my God. Gremlins. Detailed estimates. Come on. Be nice. Let's go. There we go. Okay, now look at the revenues, guys, on CRM. 23%, 21%, 23, 20s, all 20s. That's beautiful. And then now on the EPS side, 52% growth this quarter, 19, 30, and 30. I mean, those are solid numbers. What's happened recently? You're getting in a little bit of an argument here for next year, right? There's an argument over next year. Got a few analysts, a couple analysts to the downside, analysts to the upside. Why are we worried about next year? I'm worried about right now, the current quarter, next quarter. That's what I want to see. Overall trend. Oh, we get a little slump a dump. Why is there contraction next quarter? Why are you going from 37 to 33? I don't like that. 131 to 170 is nice, but why this is the next quarter? Remember, a lot of these reports, right? We can get a pretty good gauge on whether or not a company is actually going to beat. We do okay. We do all right. But then outside of that, you're always looking for that next quarter. So why is the bar so low for this next quarter right now? And the stock market's going to react to that. But have we had a big tech company, a big cloud name, become a huge disappointment this quarter? Have we had that yet? I don't know that we've had that. A couple of surprises. Okay. How much are they looking for here out of CRM? See, this looks much better. CRM at 108. So they're not looking for much of a move. They're looking for 5%. Out of CRM, a little bit more. Okay. Go out to the December expiration. What do we got? All right, I'm just going to say it. I don't like the run-up. And these numbers for next quarter are not, for me, supporting that run-up. I hate to make flash judgments, guys. I'm leaning. I'm not going to say bearish, but I'm going to say take some of the steam out of the bullishness. Let's see how it's done in its previous reports here. Said I'm watching the clock here, so it's not gonna. I'm not gonna do a full show on this, but I'm just gonna check on a couple things. Look at, they don't move too much. 152. There's a 6. There's a 4. There's a 5. Not a lot of movement on earnings for CRM. Yeah, got to go back to the Jan 2016 quarter. It's been a little bit. I don't know. I would be cautiously Are you cautiously optimistic on this? I don't know. CRM. Pretty good run there. Lots of positivity. Maybe that bar is just very low for them, right? Stock all the way up at 108. I gotta look at valuations now. Sorry if I'm going through this super fast, but this is bonus. This is bonus time right here. Of course, their EPS all over the place. So they lost money in the past. That's what that tells me. Let's go to sales. Price to sales. There we go. At least now we know this number won't be negative. Trade about 7 times. How does that with the rest of their sub-industry? Not terrible, right? A little bit of a premium to the rest of their sub-industry. Not a huge thing. We see some puts down here. 105s, 34.77, 33. You know what might be worth a shot? Let's go out to December. What might be worth a shot here? 8,000 calls there. 1,300, 1,900, 3,000. Market was looking for what? $4, $5, 112s. Want to wait 112? I don't know. Everything cloud related has been pretty good this quarter. That's right, loving the rhythm here. Everything's been good with the cloud recently. I don't like how that next quarter for them is not spectacular, but they still have a very bullish earnings trend. It's a very bullish earnings trend, and I like that. I'm considering just the 108s outright. 108s outright. Out in December. Out to December. How about that? Let's say CRM. I'll give, I don't even know what to call this. This is somewhere in between a lotto and a trade that pays. CRM snapshot judgment. Look at the long December 15th, 108 for 373. That's what I'm looking at. So you can do that, and then, yes, we're still listening, Pandora. Do that. Then you can go to the front week. There you go, Michael. 108's outright. You can go to the front week and guarantee yourself, make it a little cheaper. You could sell the 114. You can even sell the 113. You can sell the 112 if you wanted to. Look, if you sell the 112, you're going to get back 119. So look at this. You got 373 in that long 108. If you sell the 112, you're going to get back 119. So 254 is your net outlay there. Okay? 254 is the net outlay. So if this spikes up to 114, that's going to be worth $4. So you make a little bit of money there. And then if it doesn't, if it stays below this sort of 112 level, you hold on to that call. The other one expires worthless, and then you can have, you know, more flexibility there too. Mr. Wallace says, what about a 108 call, 103 put? Straddle. So you want to go long the 108 and the 103? Are you talking in December? Not bad. Not bad. Protect yourself to the downside a little bit. So there you go. I'm thinking you go long the 108 for 373 and then sell something in this front week. Get a little bit of that money back so it's not such a big chunk. And enough so that if it gets called away, you're still in the green and you're good. And then if the stock goes down, you can use the money that you got here to buy another call or whatever you want to do. So give yourself some flexibility, okay? That's how I think you should look at, and that's my snap judgment here on CRM. All right. That's all I got. I got to get out of here. Got work to do. Got to take care of some biz. Got to get our Dave's Daily Dive up. Got to figure out why the stream was so terrible today. Hefe says bit rate too high. How high is too high for a bit rate? Consider using a lower bit rate. Maybe. I think I got to yell at Comcast because I'm supposed to have spectacularly quick stuff going on, but it's not. I probably got to pay my bill. That's probably what it is. So. All right, everybody. So thanks so much for hanging out with me here today on Zach's Live Trader. I will see you all in the chat, the newly upgraded chat with bots and all sorts of stuff. I'll drop my bit. I'll drop my bit rate, okay? Hefe. And we'll go from there. So thanks so much for rocking out with me. I'm gonna switch up the music, and we'll go from there. See you all later on in the chat, and then tomorrow for whatever you guys want to do. Tell me about it. I want to know. Later.